Most investors follow trends. Very few develop edge. This show focuses on something different: how serious operators build durable wealth in overlooked niches, starting with mobile home parks. We'll break down the strategy, underwriting, discipline, talk about the roadblocks, and the operational execution that'll make your capital aligned with long term returns. This isn't about chasing deals. It's about thinking like an allocator and executing like an operator. This is the Mobile Home Park Exchange. So I want you to picture this. It is early morning, like 4 o'clock in the morning, 4:30 in the morning. We're driving back from South Georgia, and we're heading back to New York. Now, this is the tail end of a 15-hour car ride with my partner, Eric, and a potential investor. And we're excited because this was somebody who I had a relationship with and potentially being involved in this opportunity that we're about to go hard on. And everything about that trip feels exactly right. We feel like we're aligned, and we think that this is going to be the beginning of a relationship together back when we're just building out this platform. We drop him off, and then the term sheet arrives. Now, let me take you back a little bit. This isn't the first deal. This is Eric and my second deal we're doing in the mobile home park space together. And at this point, while we have the first deal done, right, that first park that we bought, which was a 31 unit park, it's 7 months in, and operationally, it doesn't have its sea legs yet. Quite frankly, it's a mess. We're at the point where 6 months in, our property manager fired us because we were on them, that it wasn't hitting the numbers we expected it to be at. We had lost almost 50% of the residents, and we realized that operations had to come in-house. So our initial investors and the challenges we had even raising money on that deal, because it was something new to be involved in the mobile home park space, 800 miles away. We knew that was a challenge. And the second opportunity arose in South Georgia. I mean, it's a distressed community. It's a major, major turnaround. But I've been in this market, and I know that it's right. I know the number's right. I know it's a heavy lift. And I know that if we get down there and we can execute, there's tremendous value to be had. And so in my brokerage business, I had a client, we'll call him Lincoln. We had done some transactional business. I had managed multifamilies that he had owned. I'd actually worked with the company that he had recently left. So they were one of my clients. And Lincoln and I had a relationship, and I was telling him about what we were looking to build and why we were getting in the mobile home park space. And he was interested, and he wanted to come down and see what we were in contract on. So he flies down. We spend days on site together, walking through. We're in diligence at this point. We had already been down there a few times. We had the framework of what we wanted to do and how we wanted to do it. We knew some of the challenges. And the time we spent down there together, everything felt aligned. The platform conversation of what we were looking to build. And in doing so, being that he just left a PE firm in New York City, the opportunity of coming into my office, take a desk, let's work together, let's see what we could do to build this out. Everything seemed like it was going in the right direction. And then as we're getting to the date where we're about to go hard on the contract, the term sheet arrives. And it has to be, or it is, probably the most predatory document that I had ever seen. In essence, if reality deviates from the business plan, we would lose our position in the asset. So even though we were right on the asset, if the business plan doesn't hit every single milestone, we can be out of the asset and he could step in and take our place. There were so many different points of this agreement that had to be renegotiated or relooked at, that the initial conversation was, this cannot be the doc, this does not match up with the conversations we had previously. And to make matters worse, the clock is running. We have to go hard on the contract or we lose the deal. And for anybody stepping into the space knows, in the beginning, losing that deal, you're probably not going to get a second look. So the question is, what do I do? We knew from the previous deal the challenges that we had in getting my existing pool of investors that had worked with me for years, getting them involved in that new venture. Do we go hard on the contract? Do we let it go? Do we try to run down with this poorly constructed deal? And at that point, I knew what I had to do. I went hard on the contract. I actually put down more money because I needed a 45-day window. I could not close in the period of time that I had originally agreed to. I said, give me 45 days, but here's more of my money that I'm committing to this deal. And at that point, I had to raise the additional capital. Now, here was the challenge. I had a deal operationally in place in the manufactured housing space that was not hitting its target 7 months in. Not a big surprise. We have a deal here that's a heavy lift. And I'm going back to a lot of investors that had worked with me, and some of them had worked with me for years, right? Almost a decade at that point. And I'm sharing with them this other opportunity. And so what was the difference in the presentation this time than it was before? And it wasn't in the fancy pitch deck. It wasn't in how we revised numbers and increased the IRR. But it was in the commitment that I made to myself and to them. It was the I'm not looking any further in this local market. They knew me as the opportunistic real estate investor who found distressed assets and opportunities in unique situations locally, whether it was speccing homes in Staten Island or finding these distressed assets where we've made and had a great experience on. And I had to let them know that that door was closed, that the opportunities that had previously been presented to you, they don't exist. And that in the future, if we are going to continue to do business, this and only this is what we are doing. There's no going back. Now, that was a huge commitment for me at that time. I had a transactional real estate brokerage business. I was getting access to opportunities here. We had top producing agents in the local market who also wanted to see deals and opportunities that the office was doing here. But I knew at that point in time that every day that I did not focus on acquiring, owning, operating another mobile home park, I was actually setting myself back from where I really wanted to be. So, this is where you have to be your future self now. You have to be the person that you expect to be before other people see that in yourself. And I will tell you, I went hard early on that contract without clarity on how that deal was getting funded. And then the real work began. We did raise the capital, and we did raise the capital to do the initial round of improvements to get us through that first huge lift to get that property towards stabilization. In that deal in particular, that was really the asset, that the opportunity, the deal that turned us into operators. It showed us what the different power structures inside your community may be, how there's different nucleuses of referral bases and people who have inside your park who might have like that dynamics that makes operating a mobile home park so much different than any other asset class. It is how some of these small changes that you can make down on the ground can create these huge cultural shifts inside of how that community will operate, how the residents will interact, and how important that culture is. One of and there's so many lessons learned from that that park that we owned, but one of the biggest issues that was happening, there was a park right next door, and there was very poor fence lines, and people would from the other park would come across into this park, which had been distressed. And it wasn't uncommon for the kids to break into the vacant homes or to do things or into the vacant homes or strip those homes or just come across that park and causing all sorts of havoc. People saw it. They recognized it. They had people walking through their backyards. They knew they didn't live there. They were crossing this park to get to the general store, which was outside of this community to the left. And it became an issue. And over time, with the presence of Eric and myself down there, we would go down, and all of a sudden you see all those people that used to trample through our community, that they would actually walk on the highway. They would walk that extra mile. They walk to the end of their park, and they would walk across the street because they know that these two guys from New York would stop them every single time, get out of the car and let them know that they were trespassing. And if they stayed, there was going to be full ramifications for that. And just those little cultural shifts made such a big impact on people who were living there. And we learned so much about being present and about operating from a distance there. And then ultimately, where we had a 24-month milestone to create a liquidity event, it happened inside of 21 months. And it wasn't because we were perfect on the business plan, but it was because we were present and intentional about what we were looking to do. And so had we taken that original term sheet, had we thought that that was the best we could have done, we could have been out of a really great asset, even though we would have executed exactly the end result would have been the same, even though the tactics and the things that would have happened on a quarterly or the milestones might have shifted a little bit. So that 45-day, but the learning, to go back, that learning, that shift of becoming someone who wanted to be in the mobile home park space to being an operator, it didn't come after that park. It didn't come with that. It came with that mindset shift. beforehand. It came in those conversations with my investors beforehand where I said, this is what doing business with me going forward is going to look like. It's going to be in this space. It's going to be doing this now before the actual proof came into play. And that is the one thing that you can control. If you found value out of this episode, I ask you to do me one favor. On the streaming platform that you're listening to, give us a rating and give us a review. That is how we help get this message to other people who are also looking for an edge, whether it's in the mobile home park space or in real estate investing in general. And if you email us at the Mobile Home Park Exchange that review, I will send to you a copy of our after site visit report, the same report we have our team utilize down on the ground to keep everybody on track, to make sure the business plan is being executed and our assets are performing the way we expect them to. Hope you enjoyed this episode. It's been another episode of the Mobile Home Park Exchange. Until next time, everyone, happy investing.